Hey everybody, it's Barron Shannon from alphatrends.net. Today's Friday, the 27th of December. Hope you had a good week here. The S&P 500 and NASDAQ were higher, the closing at new monthly, weekly, yearly highs. The Russell 2000 did lose just a little bit of ground following the semiconductors lower, and Biotechs ran up to a new high, we'll see, and then began their pullback. But overall, it was a great week for equities, and looks like I typed in something wrong right here because we were not down 16% for the week on the bonds. But let's take a look at the charts and make some sense of this all. Looking at the daily chart first of the S&P 500, we're up a lot. Let's get to the daily time frame. There we are. We're up a lot, but that doesn't mean it can't keep going higher. The market is going to do what it wants to do, and you can point to low volume and whatever you want. Certainly, risks are higher for new purchases as the market gets extended, but it means we play a stronger defense. It doesn't mean we bail on our positions. We know where our stops are, and we don't look to sell short because that's just a foolish game. We continue to hold above this rising 5-day moving average, and for me, as I've shown throughout the year and over the last 2 decades, really, that's the best intermediate term trend indicator, is a rising 5-day moving average, and that's what we have in this S&P 500. We're also well above the monthly volume weighted average price. The NASDAQ, of course, we're also holding well above that rising 5-day moving average. There's no reason to think it cannot continue to move higher as long as we have higher highs and higher lows. And if we get a pullback, it's likely to be just that, a pullback. Now, a lot of stocks are getting extended. Just don't be stupid and chase things that are already up a whole bunch. Wait for them to settle down and present the low risk, higher probability entries. The Russell 2000 pulled back a little bit this week, as we saw, and they are below the 5-day moving average, but that 5-day moving average is still rising, and this is the more important level that we want to see hold next week and into the last couple days of the year here is about 164.50-ish. Even if it breaks below that, I still think, I'm not looking for a top. There's no reason that I can see to look for a top, but maybe an area from which we pull back or digest the gains. We have a healthy market. Semiconductors were down slightly today, but overall, again, still well into all-time high territory here. Looking at this monthly chart, on the 30-minute time frame, we're seeing some sideways action, and if we were to break below and hold below 141, perhaps we see that pullback get a little bit deeper. But for now, again, buyers are in control. Now, the biotechs have done something interesting here. Let's look at the weekly chart, actually, which is they got beyond this prior peak from last year. And what we also often see is people will say, hey, look at that, it's a breakout in the biotechs, and they'll get all excited and look to buy. Well, if you've been following, the news is they're up 20+% from the lows. And look at this weekly chart. Every single week we have a higher low here since that low at the beginning of the first quarter. Every single week a higher low. That is a strong uptrend which you don't fade. But as it gets up to this point where it breaks a prior high, you look at it and say, where has it come from? Well, again, up 25-ish or so percent, and where does it have the potential to get resistance? Well, right here at this general area, we saw it find resistance before. It doesn't mean it's a short sell, but certainly it's not a reason to buy up in here. That buying a breakout after a move of this magnitude is uneducated money. So don't chase them. Let them settle down a little bit. They're still in a good intermediate term trend. The 5-day moving average is rising, but we're seeing a lot of choppy action. And as I think it was George Soros's quote, that volatility tends to peak at turning points and diminish with the trend. I'm certainly not calling for a longer term turning point, but we've had a great run, and now we're settling down a little bit, and that's to be expected, normal. The financials are still healthy. Looking at the weekly chart, this group has made it up beyond that peak from 2007, and we can see that, again, is this a breakout worth buying? Maybe, longer term down the road, 6-12 months later, we'll say, wow, that was a great place to buy. But I think that you have to look at it again from where has it come from, 26.5 to 31 to break out. Maybe it'll need to settle down a little bit. We're above a rising 20, 50, 200-day moving average, etc. On a 30-minute time frame, you can see we recaptured that 5-day moving average and it's starting to flatten out. I think the most important level for this market to hold next week will be about $30.55. The gold had a big week as well. Gold, if we look at this one, if you know me, I don't talk a lot about gold, but I have been, bullish about it as it's been holding not only above the volume-weighted average price from that high way back a couple of years ago, but on the daily time frame. Let's just redraw this all in. We have the volume-weighted average price from this low that's been holding, and as I've pointed out numerous times, especially on Twitter, that it is also that was the location of the 38.2% retracement of the May low to the recent high. And now we're back above not only the 50-day moving average, but the volume-weighted average price from the peak over here. So let's just clear that off and draw that volume-weighted average price off the peak again. The same thing applies, though. Do we want to buy gold right now? I think that this is a likely area where we can expect to see at least some consolidation of these gains, maybe even a little bit of a pullback down towards this level, and then perhaps get going. But again, don't chase these market moves. Understand what your time frame is. Control risk. Don't be scared of the headlines, and be aware of where has it come from, where does it have the potential to go. This has been a hell of a year for the bulls. Don't screw it up. Know where your exits are, and always know that, especially nowadays with commission-free trading, it's quick and easy to get back in.